I'm Matthew Boersen, and I'm the Managing Partner of Straight Path Wealth Management. Today I want to talk to you about another question that we get all the time from our retirement clients, and that is, how do taxes work in retirement? And the reality is you actually have way more control over taxes in your retirement than you probably did in your working years. While you were working for an employer, you received a W-2 at the end of the year, which you reported to the IRS. You maybe had some deductions and a little bit of leeway here or there, but realistically, the majority of your tax bill was locked in stone based on the W-2 you received from your employer. That changes a lot inside retirement. And in retirement, we actually get a lot of control over what we want to recognize, when we want to recognize, and how we want to recognize that in retirement. Especially if you have different types of accounts. And so if you have pre-tax 401k or IRAs, if you have Roth IRAs that are taxed very differently, if you have savings that are not normal retirement accounts, like a normal investment or brokerage account, all of those have different taxation strategies inside them. And by controlling those and being very intentional about the income that we receive, we can really lower tax bills inside retirement because you have the extra control. And so many times here at Straight Path, the way that we work with our retirement clients is it's helpful to think about retirement in stages. There's a stage for those retiring really early before 59 and a half, because 59 and a half is the key age that frees up full accessibility to retirement income. If you retire before 59 and a half, we have to jump through a couple hoops, we have to use a couple strategies, we can still get access to retirement accounts, but we have to be very intentional about how we do that and how to avoid taxes, extra taxes and penalties inside your account. Then we have a stage between 59 and a half and 65, because 65 is the year that you qualify for Medicare. So for many people, that means qualifying for health insurance and specifically health insurance subsidies. This becomes very important to control taxable income during those timeframes, and is when many times we look more towards Roth IRAs or non-retirement accounts to create that income. And we try to stay away, at least primarily away, from IRAs and 401ks that create taxable income when we have withdrawals. We have a time period between 65 and 72 or 73 where we have a little bit more freedom, where we can do what we need to, and our goal is just to overall minimize long-term taxes. And then we have age 72 or 73, depending on which year you were born, and then from then on until the end of the plan. And from there on, we have what's called required minimum distributions. And it's the IRS requiring us to take money out of certain types of accounts, requiring us to recognize the taxation on it. And so normally the best strategy for our retirees is typically a blend of these different types of accounts. Ideally, we have a mix of pre-tax IRA and 401k money. We have a mix of retirement Roth money inside Roth 401ks or Roth IRAs. And then we have a mix of just normal investment accounts. And every year we can look at and specify how much we want to take from each of those accounts. If you just do a quick Google search and say, where should I take the money out first in retirement, you'll get a bunch of different answers. And the reality is most of those answers are going to be really wrong, because they recognize or they recommend that you need to take all of your money out of one account, drain it all the way down, move on to account 2, and then move on to account 3. The reality is that's never the case. Most of the time, we want to blend different types of withdrawals at different amounts to lower your overall income tax and your overall taxable income. Here at Straight Path, we concentrate a lot on taxes. That's a big part of retirement, and there can be a huge impact by knowing how the tax rules work and making sure we integrate that into your retirement plan. It's why we do over 550 taxes for our clients every year. And it's why we can offer customized tax advice to you, not just a broad understanding of the rules, but the specific tax strategies that will work for you in your retirement. So if you're getting ready to retire and you have questions about retirement and the taxes that come with it, please reach out to me or my team. We'd love to sit down with you, talk about your specific situation and the different strategies we have that would be able to minimize your taxes in retirement.